I'm joined now by Christine Lagarde, the Managing Director of the International Monetary Fund here at Davos. Madame Lagarde, yesterday the IMF published revisions to its World Economic Outlook, downward revisions from your previous estimates. There's a lot of concern about what's going on in the global economy right now. The IMF still sees reasonable growth, slower growth perhaps than a lot of people would like, but reasonable growth in 2016 and beyond. Can you tell us what your view is, what's going on in the global economy now?
Well, as you said, Jerry, we moved from 3.1 in 2015 to 3.4 in 2016 and hopefully 3.6 in 2017. I say that with a little bit of hesitation because we unfortunately have been revising regularly over the course of time, because some of the downside risks that we see are certainly higher on our radar screen. And I'm here thinking about low commodity prices that we have seen across the world and in all dimensions, whether it's oil, whether it's metals, whether it's food. We are seeing China transitioning from its previous growth model to a new growth model, with the transition bumps that inevitably will occur and have occurred occasionally. And we are seeing this asynchronous monetary policy between the Fed, which has raised interest rates and will continue to do so, albeit at a slow pace, and what the ECB, the Bank of England, and the Bank of Japan are going to continue doing in order to stimulate growth and hopefully to stimulate inflation as well. So those three key downside risks are a little bit bigger on the horizon than we would have thought.
The downside risks then seem to outweigh the potential upside risks. So in other words, there's a bigger danger of undershooting that revised lower forecast in 2016 than there is of actually doing better than that.
It's a possibility, but you know, all of these three downside risks have their pluses as well. We tend to focus on the minuses always because we'd rather be on the cautious side of things. But if you look at the price of oil, for instance, it's certainly helping some of the consuming countries, some of the importing countries. If you look at China, it is certainly better that China gradually moves into a more stable, more sustainable model and can refocus on its internal market. And if you look at the asynchronous monetary policy, if the Fed is raising interest, it also means that the US economy is not doing too badly.
Why do you think these falling commodity prices seem to be having this negative impact? I mean, in the past we've been used to lower oil prices, as you say, benefiting oil-consuming countries, who are generally the largest economies in the world. This time around, every time the oil price falls or commodity price falls, the concerns about the economy grow. What's changed?
I think what we're also seeing it at the same time as oil prices fall, we're seeing, which is not unusual, a strengthening of the dollar, which has its consequences, including on the US economy. We are in the context of probably a lower demand addressed to oil in general. And we probably also are facing a much stronger and abrupt response by those who had invested in the oil sectors and oil-related sectors. So the combination of all that is producing less of a net benefit out of lower oil prices than we had seen in the past.
Fed raised interest rates in the US last month for the first time in many years. Said at the time that it expects its policymakers expect another 4 interest rate increases in 2016. Is the world economy strong enough? Are the imbalances in the world economy enough of a concern to suggest to you that maybe 4 interest rate increases this year may be too many?
Not for me to say. I think that markets don't expect probably that many, and they expect the first one to be much later in the year than a few months ago. And I know that the Fed is going to be very attentive to how inflation and core inflation is moving, and will again be data dependent.
And very quickly, lastly, China. You mentioned it's a risk to the economy. What's your sense? It's very hard to figure out sometimes what's going on there. Not a lot of faith in the official data. It is going through a transition. What's your sense of where China is right now with the economic transition that it's going through, with some of the debt issues that it's having? A lot of concerns about it in the markets. Are those concerns overdone?
We believe that they're a little bit overdone. Yeah.
China's going to be basically okay.
It's
6. You do forecast slowing growth for China over the next few years, though.
Yeah,
down from 6.9 to 6. Yeah.
We have for at least 2 years. And we know that it is coming, and we know that it is legitimate, and we know that if it means a more sustainable and hopefully more inclusive growth, it's better for China, it's better for the world. And we do forecast China at 6.3 in 2016, which is a drop from 6.9 in 2015, and we forecast 2017 yet a bit lower. Yeah.
Madame Lagarde, thank you very much indeed for joining me.